All right, I got another Compoundle in the mix here. We are checking out a new situation, and make sure you tune in until the end to see what I think of the stock today and whether it's still worth a good investment or not. So checking out April 2022, we got a self-storage REIT company here. It has a market cap of $61 billion, a price to earnings of 35, a 5-year earnings per share CAGR of 10%, so pretty solid. Debt to equity is nothing too crazy at 0.8%. Looking at the advanced metrics here, we have a 73% gross margin. That's really solid. Operating margin 49% and a net profit margin of 57%. Holy, these are strong numbers for a really good business. 22% return on equity. I'm liking what I'm seeing so far. Now, from a growth standpoint, things are a bit slower. 5-year revenue is only 6%. Net profit growth is only 8%. Shareholder equity only 1%, and free cash flow 7%. So the growth isn't as great. And their debt to free cash flow is a bit higher at 3.75. It's nothing crazy still, and from a debt to equity standpoint, still attractive. I don't mind what I'm seeing overall. And you can see that the company really has started performing well, especially it looks like it turned around starting in 2020 and really shot up. Being in the property and real estate area, this during an influx of a lot of cash and capital that came into the market, as well as much lower interest rates, attracted a lot of growth there. Now, and you can see that both based on the performance of the stock price, but as well as its current price to earnings ratio. This is an interesting one. I think that it looks like a decent business for the most part. I think that from a fundamental standpoint, especially its operating margins and its return on equity, I really like those elements. The growth isn't that great, but it is seeing higher earnings per share growth, so that is solid there. It's just when it comes to that valuation, it makes me kind of wonder. I'm a little nervous whether I would want to invest in this business at this time. Not saying it's a bad company, but this is kind of one of those situations where I'd start to see that valuation here. And given the context of the time, we're seeing right at the peak bubble area, I think that I'm actually going to take a pass on this business. Last time around, you can see that we generated about $4,000 in return based on our Google investment. Things are pretty solid. Do I want to take the risk with a business like this and where the current situation is? I don't know. It doesn't look too good. So I think given all those factors, looking at it now, I think I'm actually going to take a pass on this business here, and we can see what I did. And just like that, everyone, we've seen how the stock has performed from May 2022. Again, more than anything, what I'm seeing is a pretty good looking business from the fundamental standpoint, but this is the price side of things. You want to pay an appropriate price based on the intrinsic value of the company and reflective of its true value. And in this case, what I was seeing is a really strong fundamental business, but based on where the market was pricing it compared to those fundamentals, it didn't look that attractive. And once again, also factoring in at the time that this is around COVID, I was aware that this is bubble territory. A lot of stocks were overvalued. There's a chance that things weren't going to look good. And well, in this case, we dodged a bullet because it has fallen from a price of $350 per share down to $307 per share as of February 2026. So if I had invested, I'd have a net loss of about 12% there. It's not terrible, but it's definitely not good. That's not what you want. And so by making that decision, we have just simply by saying no, even though it looks attractive, you've made a better decision. You can put that money elsewhere, or you can just decide to reap the reward of your quality assets. That's the best thing about investing is you always get to make the decisions. Mr. Market is going to throw new prices at you every day, and you have the choice to decide whether you want to make an investment or not. And it all comes down to what you believe the company is worth and what you're willing to pay. And you can say no for years. If you believe, you can look elsewhere. There's opportunities at all corners of the market, and you don't have to stick in one area or one niche. Like everybody's talking about AI, but if you don't think things are attractive, well, there's no point in investing. So looking at Compoundle here, we made a good decision on day 2, feeling pretty solid overall. Happy to see that we made the right decision. Definitely going to see that on the leaderboard, I'm still kicking at the top, baby. So if you want to come after me, come play some Compoundle. It'll be link in the bio. Also, make sure to like and follow and let me know what you think. But as I said, the last element, let's see if public storage is worth an investment today. Well, first and foremost, we're seeing here that the company has a profit margin of 37%, still pretty solid. Operating margin of 46% here. Return on equity, 18, 19%, all pretty good. You know, the company is generating, as of the trailing 12 months, $4.8 billion. It's got net income of about $1.6 billion, so pretty decent, and about $318 million of cash versus $10 billion of debt. So this is an area that, you know, it's not terrible. Like you can see their operating cash is $3 billion. So that's a ratio of about a debt to free cash flow ratio of about 3. So nothing crazy there, but it's not necessarily ideal there. So something to keep in mind. Now, from a market cap standpoint, the company currently has a $54 billion market cap and a trailing PE of 34. Based on looking at this, based on what we saw in Compoundle and our decision there, really, I'm looking at a business that hasn't really changed too much. It's still a solid business overall, but that PE ratio makes me wary that there may be a continual level of stagnation or even a contraction at this time. So overall, just as I did on Compoundle, I think I would take a pass on public storage also at this time. If you want to check it out, if you want to check out the game, link is in the bio. Make sure you go make these decisions on a daily basis, share it with friends, and also make sure to give this channel a like, subscribe, and a comment to help the content grow. Do you think you can beat me? Let's find out.